Stock Trader Network pre-market prep YouTube. Hope everyone is having a lovely Wednesday so far. Options Unchained with CC Lagator coming at you live here every Wednesday. There's the man himself, CC Lagator. How are you doing this week?
I am good. It's kind of an interesting day here.
Kind of an interesting day. So we did hear right out of the gate, well, not right out of the gate, but a half hour after market open, a lot of Wall Street was waiting to hear if there was going to be a Supreme Court opinion on the US tariff case. The can was kicked down the road Wednesday last week, I think it was. And we are again getting kicked down the road here right after that case started, or right after the Supreme Court proceeding started this morning at 10 a.m. They said we will not get to the U.S. tariff case again. And markets reacted initially higher and then sort of lower. And now we're kind of just sort of like drifting lower here into the afternoon.
With,
What did you make of this, CC?
I believe, and we could go back and check this maybe, it's almost the opposite reaction of last week when
I
they
think
kicked the
so.
can down the road.
I
So I
think
feel
so.
like we sold off on that and then we rallied, right?
Like kind of the rest of the day last week. Yes,
Yeah. So
exactly.
if this is the case that that's what's happening, and it may be at least partially, it sets up for an interesting thing where we could bounce into the close theoretically. But yeah, there's a lot of cross currents going on right now. I mean, you just right before we came on the air, Brent was telling me about like another headline from China on some of the cybersecurity stocks.
Oh yeah.
And it's just sort of like every day you have to, like, there's so many headlines hitting every day. You've got all the geopolitical stuff, you've got this tariff thing coming up, and then we're sort of shrugging off some of the economic data, I would say. Like, we're like, I don't know if the CPI and the PPI have really even mattered into the, entered the conversation the last 2 days.
Yeah, not really. I mean, the November PPI was the reading that we got today. It was unchanged on a month-over-month basis. I think economists were looking for like a 0.2% increase. So it was lighter than expected, but like the response was muted for
I
sure.
I will say there is one interesting thing going on today, and that is the reaction in yields today. So, and I don't know what to make of this, but if you look at the 10-year, it's down to almost 413 right now, right? We got up near like 420 the last week or so. Yields selling off typically, or yields going lower typically on, I would say, good news is bullish for stocks, right? And you would typically, IWM is green today, so it is actually kind of helping IWM. I would say IWM is
Mhm.
flat, what we should
Yeah.
say, and that's the most rate sensitive of the major indices. However, what you would have to be careful, there's so much like weird rotation going on to start this year that the negative aspect to yields being down are, what if everyone's, like, what if that's a rotation literally out of stocks into bonds, right? And so that's kind of like the, keep your antenna up, not necessarily today, not that it matters for today, but
Yeah.
if that starts to become a theme over the next, say week or two, where suddenly, we're now more focused on the economy and like weakness in the economy and everything,
Yeah.
that would be, bearish, I would say. And
Sure.
that could turn what we've recently seen, just over, that we've sort of hit a level and we seem to be struggling to, like, get significant. We've made new highs last week. They just have not been that impressive, I would say.
Mhm.
And a lot of times under the surface, I think what everybody's waiting for is you have this early year rotation where investors have been, and institutions and all, have been clearly over the last month rotating out of like mega cap tech and like big, in a lot of like mega cap growth too, and
Mhm.
going into value, going into some of the the underperforming sectors from last year. The assumption, or it's not an assumption, but the interesting dynamic to try to figure out as a trader and an investor is, all right, so that's enough, NVIDIA and the Microsofts and all haven't been going down enough to kind of affect that. It's been enough to us to get to like barely to new highs, right? For the last week. And then it's like, well, the question is, if does that continue? Do people continue to take, money out of the Mag 7 Plus, right?
Mm.
And rotate it? Because eventually that's not enough to, if those stocks start heading down, the sheer weight of that market cap is not enough to sustain the the SPX and the Qs and everything. So if money started to say, all right, well, let's get back in NVIDIA, right? It hasn't really gone anywhere for 6 months. Let's buy the dip in Microsoft. Let's buy the dip in Apple. If you started to see that alongside what's already happened, then you're spiking to new highs. IWM at some point sees, just sort of like a parabolic move from here.
Mm.
So we don't know yet how this is going to shape up, but it goes to like what we talked about on last week's show.
Yeah, absolutely.
Which is either way of those scenarios that I just described, volatility was and probably still is too cheap.
Well, I want to give you a compliment, CC, because this is something that you were kind of all over last week, and it seems like it absolutely was the case, and like you're saying, kind of probably continues to be the case here.
Yeah, and if you look at that, we have that orange slide from last
Okay.
week.
Yep.
We're going to use orange to take victory laps of stuff we talked about the week before.
Okay.
But I want to have this as orange. This is this is what we talked about last week. So this was the argument that at the time we were making new highs. The market was, SPX would look like it was going to take a run at 7,000. And the VIX kind of just stopped going down. And it kind of was hanging around 15. It was down to 14 and a half, maybe back up to 15, maybe a little bit above 15. And that was despite the fact that the broader market was rallying. So the VIX was signaling something, and that's what we talked about last week. And I agreed with it, which was just because you're at new highs doesn't mean the VIX has to be down at 12, right? And it was signaling that there was some stuff bubbling up under the surface that could either take us, parabolic rip through the prior highs, or we were due for a pullback. And I think that's what we're seeing, especially today. And, you got the VIX back up to 18. Now, if you go to the expected moves for the next week card,
Okay.
this is, and by the way, the expected move to the downside that we showed last week was 68.50 in the SPX cash, right? So that is something to watch. Like if we kind of have an ugly close, that 68.50 is an interesting level to watch, because that's essentially what options were pricing coming into, like this week. So this is the update. So these are all slightly higher than last week. Those one-day moves are slightly higher, mainly because of the last 2 days volatility, and the 1 week moves are slightly higher. Now, I think this is probably about correct. Like the options market has kind of, the volatility in the options market has expanded the past week. But I would still say that looking out, if you were looking to position out to February, out to March in the options market right now, volatility is still too cheap. And this is probably about correct in the short duration. And the reason for it is, it's got to survive a Supreme Court ruling where we don't know if that's coming Friday or whenever.
Yeah.
But as far as taking that out of the equation, the options market now has to begin to price in the divergence of all of these earnings reports every day, right? So as we get deeper into earnings season, we've obviously seen the negative reaction to basically
the
beats across the board in the banks, right? But the stocks were too high, right?
Yep.
As we start to get into tech and everything next week, and I think we have Taiwan Semi tonight. We'll get into that. It's got to start to, you're going to see divergence. You're going to see one sector up that week. You're going to see one sector down. And at the SPX and Q level, that might balance out a little bit.
Okay.
And so I think this is about right. But I would argue that if you're looking for trades out to, into February and into March, it's the volatility is still too low.
Okay, so something that you were saying to me, CC, is that like we haven't had, and I'm trying to paint the picture for this approaching earnings season that we're getting into. This is how all stocks are setting up here into this earnings season. You were saying like we haven't had a 1% down day in almost since November. It's been like a month and a half.
Yeah,
So, sort of speaking to the big banks who we got here, well, this is how these stocks are setting up, I think,
yeah. And the rotation that we've seen to begin the year, I think, is also interesting because the biggest increases in earnings expectations were to tech and materials, I believe, into this earnings season.
Okay.
And the earnings forecast declines were in sectors like energy and consumer staples and things, I believe. So you're seeing this, sort of selling high and buying low within the sectors, and that's what we've been seeing the last 2 weeks, I would say.
Mhm.
And into earnings season, if you have if you are heavily weighted, as we all are, into the Mag 7 Plus, right? Like if you own any large ETFs or any large mutual funds, you own a ton of Nvidia, you own a ton of Microsoft,
Yeah.
you own a ton of Google. Those are the ones I'm sort of talking about, like look out past earnings season and potentially hedge your portfolio with, like let's say a Q's put spread or something like that.
Okay, gotcha.
So the next thing I wanted to talk about, and this is interesting on a day like today, because kind of want to get ahead of, if my personal feeling is intraday, we might see a bounce here and, take us back up above 6,900. If it does not, and this does carry through, and let's say we see a couple more days of selling, I kind of wanted to go to how I do back of the napkin VIX spikes and the
Okay.
potential to buy those dips. And so we have that light blue card that we can
Okay.
go over a little bit here.
Cool.
And so right now on this, this isn't much of a sell-off. We're only really down like 100 points in the last 2 days in the SPX, but that's been enough to get the VIX up to 18, right? I would say, as a general rule of thumb, especially if you've started from a very low vol environment like we've been in, right, for the last month or so, when you see a minor pullback in the market and you get a VIX that spikes over a day or 2 days or 3 days up, above to 20 or just above 20, we call it 21, something in that range, you will do well if you buy that dip over time, right? You are
Okay.
generally going to be
Generally.
correct that
Yeah.
that is just the minor low, no new, like we're having a hard time even describing why we're down today, right? If this was a banking crisis or something, this does not count, like this strategy. But in a low volatility environment where the trend is still fairly bullish, if you see a minor pullback of a couple of percent and you get a VIX spike up above 20, that tends to be a short duration buy signal, and you are going to be right more times than you're wrong.
Hmm.
If this turns into a trend, so let's say we get a spike in the VIX, we go down to the SPX goes down to 68.50 or 68.25 tomorrow, and you get that VIX spike to 20, it's probably a buy. You probably bounce. You get, I don't know, 75, 100 SPX points to the upside, but then it fails, right? The next time down, once you've already seen that spike to 20 in the VIX or 21, it needs more to signal a capitulation.
Gotcha.
So you get that bounce, the VIX comes back to 17 or 16 and a half or whatever, and
Hmm.
then the market reverses lower again, and it makes like a new low, let's say. you need more of a signal. 20
Right.
VIX isn't enough at that point. You
Right.
actually
Okay.
need it to go. And those are the sort of sell-offs that turn into the 5 to 7% range of a pullback.
Okay.
And those tend to see VIX spikes up near 30, right? And those ones, you are going, over time, if that is your strategy and that is your signal. You just saw the VIX, it spiked to 28. It's a secondary low of a pullback that we've just seen. You are going to be extremely right, especially long term. If you're looking out a couple of months, right?
Mhm.
That is going to be you're going to be right 8 out of 10 times that a month, even a month and a half, you are up in the market, right? So when you see those, you actually also have to kind of think in your time frame, like how far am I going out to like play for this bounce, right? And then as we get to the end of the card, this
Mhm.
is this the big one? Is this like April, right? Which we get, right? And in those scenarios, you get a spike in the VIX and it heads towards 50. I don't even know how high did we get back in April.
Let's
So
see.
let me look up the VIX. I want to say we got to like 60.
60-13 on the VIX.
There you go. All right. So those are the ones. There's generally a background story going on. In that case, it was tariffs.
Yeah.
It could be the COVID closures, right? Was probably the last time that kind of happened. Or it's some sort of financial worries, it's bank failures, it's something like that. Those ones are, you're going to see that spike and it's going to be, the VIX is above 40, it goes to 50, it might even hit like 60 in a situation like that. If you bought the market on those spikes, I
Mhm.
mean, you're going to be batting close to 1,000, right?
Gotcha.
Now, you might have to survive a ton of nonsense over those next couple of days or that week, but you are generally, and that's one where you should be looking out, where could this stock be in it's basically on the April version of that. How low did Nvidia get? It got to
Let's see.
80s, I want to say.
It got to, yeah, 85. Yeah.
Right.
April 7th, 85, 83 was the low.
Tho- those are those ones where you're like, I'm going to close my eyes. I'm going to back up the truck. I'm going to buy NVIDIA. And my price target over the next 6 months to a year is going to be
Mhm.
150. And you would have ended up being surprised that it went to 210, right? But
Right.
those are those kinds of moments, right? So I would say in a normal market, if we see that VIX spike to 20 or to 21 or 22 in the next couple of days, it's likely a short duration buy. And then once you get your bounce, you kind of want to reposition and you're like, was that it? Maybe of like if you bought the dip there and whether it was options or you just, loaded up on some stocks and things like that or the indices. And then once it pulls back and it sort of tests those levels, 20 is no longer your buy in the VIX. You've got to see it up in the upper 20s because it usually
Gotcha.
needs a second capitulation at that point.
This stuff is starting to sink in for me, CC. I like it. I like it. Slowly but surely, you're teaching this old dog some new options tricks.
And just, to sort of paint a picture of what's going on when the
Okay.
VIX goes to 20
Okay.
and then when it goes to 30. When it goes to 20, it's basically everyone that had been like, I'm just going to make a fortune selling options for the next year or 2 months or whatever it is. And I'm never going to be wrong. And the market's never going to move more than 1% a day. They're suddenly proven wrong on a day like today.
Right.
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 And so
Right.
all of a sudden they're backing off and they're no longer sellers and they're no longer hammering volatility. And then let's say you saw a follow through on a day like today. Then all of a sudden, people are like, oh my God, I'm not hedged. I started the year, we were
Yeah.
at the all time highs, and they're starting to reach for puts and everything.
Sure.
Those,
Sure.
those puts are pretty cheap right now, but
Mhm.
it's enough to push them up. Then you get a bounce, and everyone's like, oh, it's all back to normal. The second time down, when you see that VIX to 30, that is much more panic. It's like I got caught off sides on the bounce. I got, it was a head fake. We're now going lower. I desperately need puts right now. And everybody rushes out and gets the puts at the worst possible moment. The VIX spikes to 30. Everybody buys their puts, gets filled, and then the market bounces and all that stuff goes like worthless, right? And that's why the VIX goes from 30 right back to 20 in like a day.
Okay, so I really like the point about, like the market getting so much information during an earnings season and options bettors having to price in, so much variation, and this stock within the group did well and this stock within the group did poorly. How are you planning to play, probably an intraday pickup in volatility
Well,
over the next month or so?
so it is fascinating because that's actually, I hadn't even thought of it that way, but you just planted something in
Uh-oh.
my, well,
Uh-oh.
so a lot of times during earnings season, and you'll see it with the banks the last 2 days, is, we've basically, futures have been lower by, I want to say 0.5% or so the last 2 mornings. And it was basically because of JP Morgan yesterday. And then the reaction to, the Citi and Wells and all earnings this morning.
Yeah.
A lot of times, I think it's the banks always go first.
Mm-hmm.
But I feel like they're usually um, there's usually some tech soon after to kind of
Like
fill in.
Netflix, I want to say, is like
We have
next
Netflix
week.
next week. We have Taiwan Semi tonight
Yeah.
overnight.
Yep.
And that's where it starts to exactly what you're talking about is you can kind of potentially. So let's say the banks were overpriced going into earnings. They all
Okay.
beat. Investors are like, let's take profits. They
Yep.
didn't beat enough.
Yep.
What if the opposite happens in the semiconductor stocks, right? And so what if we start seeing that? What if, like anything associated with Bitcoin, what if Bitcoin finally bounced, right? And it all starts to, kind of cancel each other out. And
Yeah.
in those moments, if you see a meta report where the market opens down, the Qs are down 1.5% because Meta missed and it's down huge on earnings.
Yeah.
Those mornings tend to be, well, is that a Meta story or is that a Qs story?
Mm-hmm.
Right.
Yeah.
And those moments tend to be like, I want to fade this opening gap, right? I want to buy this dip and vice versa. Like if Netflix were to kill it next week and the Qs were up pre-market and the SPX was up pre-market, but the overall tone of the market is weak, might be a good opportunity to sell into that, right? Because
Yeah. Okay.
that is something that is going to mean revert. And even if Netflix keeps going higher the rest of the day, people would be like, why the hell did I buy IBM on a Netflix beating, right? And so that kind of, sort of intraday buy the dip, sell the rip is particularly strong during earnings seasons because I think people overreact to an individual names report.
I am just reading Prad's question here, just saying Taiwan Semi tomorrow pre-market. Yeah, it's probably Taiwan time or
It's like 2 a.m. I
it's
want to
like
say
2
normally.
I was gonna say like 1 or 2 a.m.
So
So
let's look at it.
okay.
Let's kind of preview this one real quick.
Sure, yeah.
So you've got this. How far is this? So starting the new year, this thing, gapped higher. It's funny, you can tell it's a foreign like ADR or whatever by all these
Subs
gaps.
shop, yeah.
So because it's already made its move before we open.
Right.
So you look at this opening gap for the year. This is a 1 month chart, and it's essentially been in about a like 3.5% to the downside and about 2.5% to the upside. So what is that? 6%? See that math?
Yeah.
So it's
Impressive.
basically been in about a 6.6% total range, which is, let's call it three. Let's cheat and call it 3% to either side. The options market is pricing a 4% expected move for earnings, which is probably about correct. Let's go back to a longer chart. You could argue that's about right. So if you look at this 4% moves, it's catching all of these prior highs over this chart, right?
Yeah.
So it's essentially saying if the reaction is negative, it is absolutely got to hold this level, and that level is let's call it 310, or no, it's even closer. So it is, yeah, 313 is the expected move. If TSM misses, watch that level, watch that 313 level, and it's easy to remember because it's these prior highs more or less, but that
Yeah.
is the expected move to the downside. I would say a chart like this, especially given some of the other charts in the market right now, if this thing went higher on earnings and the expected move to the upside is 339, so keep 340 as a sort of
Nice
shortcut.
round number. Yeah.
If this thing goes through 340, it can keep going, right? There's absolutely, if you see this thing open above 340 and it doesn't get tested immediately, either pre-market or after the open, and it stays above 340, this is the type of chart and the type of option setup where it could just keep going, and you could see it 350 by the end of the day, right?
Yeah. Yeah.
But the downside, I would say, if this thing does not hold that 313 to 310 level and you see weakness into the close tomorrow, it's not only bad for this, but it's bad for everything. I mean, let's pull up Nvidia real quick.
Okay.
So Nvidia's 1 month chart, 3 month chart. Yeah, I mean, you would have to think if there's a really negative reaction, because I don't know who goes after Taiwan for a while in this space. We'll have to look like because Broadcom and Nvidia go really late in the cycle,
Yeah.
in the
Yep.
earnings schedule, right? So
Right.
this would probably be enough where they're going to want to scare people in Nvidia and take you down, but like definitely below 180. So we'll see. That's going to be a really interesting one. But man, like, look at this chart, right? So we've been talking about this I think we started talking about it back in December, of like that this had just, Nvidia is essentially sideways since last summer, right?
Yeah.
So I'm on July 30th right now,
Okay.
and it was 182 back then, right? Look at us now,
Yep.
182. So
Hmm.
Nvidia has not moved. And in that time, you've seen this rotation enough that the SPX, has been able to, and we'll look at the Qs right after this. But that same chart, this is July. This is the same spot right back here. So the SPX has gone from basically 6,400 to 6,900 in that same time, right? The Qs have gone from July right here. The Qs have basically gone from 570 to 615. Less impressive, obviously, because of Nvidia and these names.
Yeah.
But I think I would say this now that I think about it, this TSM earnings tonight is extremely important for the next couple of weeks and what the
Sure.
market
Yeah.
does,
Yeah. Yeah.
because the argument for this market to rip to new highs and keep ripping and starting the first couple of months of the year off really well rather than just the first week would be that these names start to participate. And you look at Microsoft,
Hmm.
it's like, look at that chart. It's just awful,
Ugly.
awful stuff.
Ugly.
Might be getting close. Meta, terrible. I typed it in wrong. Meta, 1 year chart. Look at that. That's terrible. That is a terrible, terrible looking chart. Now, obviously, on a 5 year, it looks a lot better.
Hmm.
But like, if you drew some sort of uptrend right here, maybe soon. I particularly like to stay away from Meta because I think they're kind of on the outside looking in for a lot of this stuff that's going on.
Yeah. I think you're right.
Yeah, but like a Microsoft, an Nvidia, that to me, the next leg is going to be really hard if it's IWM and consumer staples stocks powering the rally, right? It's going to need these guys at some point, and they're all going to, obviously Microsoft reports early first week of Feb. You're going to need these. Maybe sentiment will get so bad into those. We should revisit these.
Well,
Sorry to be
so
going
what?
all over the place because
No, no, it's fine. It's
so we should revisit these. So let's revisit these next week
okay.
because I think there if we continued lower into here and we, you're looking at Microsoft near 450. Dennis's whole thing about like buying into earnings. I mean, look at this chart right here. This is arguably a buy right now. And again, if you're wrong, the whole market is effed, right? But if this thing holds here and it starts running back up towards 500 into earnings, that's the potential for a great trade. Let's look at this. So we're going right into it.
I love
So
it.
let's do prior to earnings. And let's look for a trade that would be like a rally into earnings, but not taking the risk of earnings, right? So let's look at a call spread. What expiration am I? Jan 30th, right? Is that when is earnings? It is, Jan 28th. Okay.
Oh,
So let's go. You kind of have to do earnings. Let's just do earnings. Screw it. All right. So let's look on a 1-year chart here in Microsoft. I mean, I think I would even go a little bit higher than here. So let's go a 460, 490. This gives you a break even of what is that? 470 in the stock. That's where it closed yesterday, right?
hmm.
So these are the kinds of, interesting trades I think that you could be looking at right now. And what I'd be doing with this is I wouldn't be writing it into earnings, but I would basically be positioning for the next couple of weeks that this could start to creep higher back towards 500 or 490 or 475 at least into earnings. And like a trade like this might be a really nice trade.
I like that we just dove right into the Microsoft there.
It's
So
too interesting of a chart. Like I
yeah,
didn't realize that we were basically down, and that's an interesting sort of 7%. That's about a 6% range it's been trading in since Thanksgiving, and it's sort of been going sideways. How this resolves is very important to what the
sure.
market does next. Yeah.
So I want to just give a little break in here. Denmark's foreign minister, this was the person that was in the meeting with JD Vance and Marco Rubio this morning, saying a comment here: not necessary for the U.S. to acquire Greenland. We would hope that that comment was predicated on a nice conversation in DC with the vice president and these foreign ministers today. But this is the first comment I believe that we have heard today since that meeting took place this morning, I think around 9:30 a.m. Not doing too much for our information here. It's kind of an ambiguous comment. Market is not really reacting to it. So CC, real quick, I want
Wait, can
to
I just say something real quick? Just
maybe.
having, just even hearing you read out a headline like that, I feel like I'm high. So
This is the reality. This is
we're
the
waiting.
world we live
We're
in,
waiting
CC.
on whether it's necessary to invade Greenland or whatever. Like it's just kind of wild
You
stuff.
said it, not I. I
Yeah.
want to just to get a little crazy here for a second, CC.
Hmm.
So what you were just saying about, kind of the scenario, I guess, if these tech names aren't able to participate in this earnings season. So what if we had a scenario? What if we're already in a scenario? And this is Dennis's kind of case for the last good month or 2 months now.
Oh, I want to hear it. Yeah.
What if value is just cool again? What if it's cool to be in value stocks?
Then you got to be a stock picker, right? And I don't think that's enough to carry the overall market higher. So I think
Sure.
if he is correct, and he is absolutely 1,000% correct right now, because that's exactly what's happening in this market, right?
Yeah.
So people are shifting out of growth, they're looking for value. And then, IWM is like a wild card because it's such a weird mix of stocks. It's got regional banks and things. It's got, energy like solar. It's got, all kinds of stuff. But to his point, 100% correct. In which case you want to be a stock picker.
Hmm.
And not that I am, But like, for instance, yesterday I bought, so I've been looking at oil being
Are
below 60,
are
right?
you about to show us a cheeky trade right here?
Well, this one's super cheeky. I bought calls,
How
I
did
bought
I know?
calls in rig yesterday,
What, like
and
what, like Transocean?
yeah, and
What the heck?
yeah, but sort of
How'd
like,
you
look
get
at this,
yourself
like,
into this?
but like, look at this like 5-year chart or whatever. So anyway, I don't even want to get into this one because it's kind of insane. But
Okay.
like, but yeah. So, but just, and it's like a $4 stock. And I think I bought the 4 calls for 50 cents. So I was paying like 10 cents more than the stock's trading. And I was like, all right, well, how far could this thing run? Could this thing run to 7? Could it run to 8? Could it run to 10? I don't know. But 50 cents, I can sort of lever up in a name like this. So that's one cheeky trade. So the other ones I would say are, well, like, throw some symbols at me because this is sort of interesting. Because
Like
a lot of times
symbols
these value
that
names tend to be a little boring on the option side.
like symbols that we were talking about
Yeah,
this
like
week.
Dennis is talking
So
about.
so Dennis has been pretty excited about, well, not excited, but he just thinks that there's major trouble in SaaS land. The CRMs and the Adobes and the Workdays and the Atlassians of the world. He thinks that this is just like a wrecked space.
Okay, so these ones aren't the names that you're trying to scoop.
No.
Yeah,
Oh, okay. You're saying names that you're trying to scoop. Okay.
yeah.
What about like I don't know if this is a good example. What about like a Nebius, NBIS?
NV or B?
Bravo, B.
IS?
Yeah.
All right, let's look at it. I love when you bring up stuff and I'm like, I have no idea what you're talking about. So what do these guys do? They
So consider them in the data center space.
Okay, full stack infrastructure. All right.
Yeah. Yeah.
All right. So
Is
this
this a better
one,
this is a better example?
this is, oh, it's great.
Okay, sweet.
Yeah. So next earnings, February 18th, right? So you got a month and change. Expected move right now between now and then is 22%, right?
Okay.
So high risk, high reward, baby. Um, the prior earnings, it's interesting. So last August it moved 19%, let's say. The other one's not so much, like 7%, 4%, 3%.
Yeah,
Uh,
pretty muted responses.
yeah. So I don't even have it on back then. Okay. So, oh, and I'm missing an April one, but we can probably spot it on the chart. When was April? Looks like muted. So, all right. So February
Would you
uh,
say 15th?
18th.
18th.
All right. So you got to go out to like the 25th.
Okay.
So let's go to the 25th and let's look, or 27th, whenever that expiration is. So options are going to be expensive, um, clearly, because this thing is pricing a $20 move in either direction. So let's just look at kind of call spreads up to that range and see if we can play around. So let's look at a 1-year chart. That's probably enough, 130, right? So this is a 105, 130 call spread, and it costs you about a little over $7, almost 7.5, to make up to 17.5. That's a pretty decent trade, given that, let's just see what this stock has done the last couple of days. Given that that doesn't seem like that massive of a move in a stock like this.
Yeah.
So that's one. The sort of the cheekier version of this, if you're like, oh man, I'm not doing a $7 trade in this thing because I
Yeah.
could be 100% wrong and lose that $7.
Yeah.
Another way to do that would be, let's just do like a 110, 120, right? And so this is basically this kind of trade. I do this often. I'm going to look at even the 110 now, that one. All right. So this 110, 120 trade, I kind of like this. All right. So this is buying the 110 call for 10.50, right? So you can imagine the break even on that. It is 120.5, right? So if you just bought the 110 call and somebody's out there buying it right now as we speak,
Mhm.
and they're paying 10.5 for the 110 call, they need the stock to go to 120 and a half
Yeah, sure.
before they even break even on that expiration if the stock goes higher, right?
Yeah, that's rough.
Um, and then they would need to say double their money. They would need it to go to up above like 131, right? So 131 is up here. It's the prior
Mhm.
highs. So in order to get a double on that call, you need this thing to go back to the prior highs. So that is a setup to what we're about to look at.
Okay.
The 110, 120 call spread just needs the stock to be above 113 after earnings, and ideally above 120 where it becomes max gain. And even if it went to 190, you would be happy with this trade because you would have spent 330 for it to make, almost 700,
Mm.
right? So you would have spent, and you could catch this on the low today. Maybe you get it for $3, make up to $7 in this thing, right? So you would almost triple your money with a move that only needs to be above 120 for it to happen, rather than needing this thing to go to 132 to double your money on that straight up call. And just to sort of illustrate that point, the 120 call, you are selling at 730, right? So these are the kinds of trades that, like in high vol names, in this one, let's even go one higher. It's not that much better. I like that one
Yeah.
or an earnings play where you're positioned for higher. You're basically saying if this thing goes lower on earnings or it just craps out into earnings, I lose my $300. But if I get my move, I don't care how high it goes because I'm going to, more than double my trade.
I like that one too.
Hmm.
What about just a little more of an earning setup here? Richard was asking about a potential setup for Netflix next week.
Oh, okay. So let's look at that. And I think this report's before we're back on next Wednesday.
Let me
So,
double check. I think you're right.
yeah,
Looking right now.
I think it's like Tuesday or something.
It is Tuesday after market close confirmed. Yes.
So this thing is down, I would assume. There's some seasonality. It's down from highs, everything like that, but it's mainly because of the merger mania, right?
WWBD thing. I think so. I think so.
Y-
Although it's the stocks really have been chopping around. I feel like it's been hard to predict when the stocks are going to move higher or lower, but I think generally that's a safe assumption what you're saying.
Mhm. It's interesting because that's a 5 here. You're getting pretty close in this thing, right? Where it probably becomes fairly risk-free. So, like if you bought this thing at 83, your risk, I would say, is to about 70, right? Your upside is much higher, right? So let's now go dive into the earnings. So you're getting pretty close to where the risk reward is skewed, right? Where, if this thing gets hammered from here, um, I think it's not as much as the opportunity to the upside. Now, just earnings itself is 8%. So that takes you down to 81 to the downside and 95 to the upside, right? And if you look at, let's go back to the 1 year chart, that is like nothing on this chart, right?
Yeah, true.
So you can
Yeah,
barely see it. This is a
right.
1 year chart, and it would essentially take you back up to just this range it's been in since the beginning of
In a
December.
month.
I
Yeah.
would say this move is way underpriced,
Yeah.
right?
Yeah.
The only argument I could say that why the options market is so underpriced on this, I mean, 67 vol, it seems like nothing in this. I would say the only argument is that maybe they're so caught up in the other news that
Mhm.
this earnings itself won't matter. But let's look at like how this has moved in past. So the last move was 10%, right? So let's say instead of a uh, nine or what is that, a $7 move? Yeah, $7. Let's say you're looking at least at a $10 move. I think that's how you would want to be positioning. So to the upside, I would actually maybe make it not so binary, and I would go past earnings because of what I just said. Is like maybe the earnings reaction itself isn't what's moving this stock right now, and
Sure.
people are
Okay.
looking beyond that to like the broader like merger news.
Yeah.
So I would be going out farther in this, further in time, and let's look at maybe even just a call. I think I would just buy a call in this soon. If you were bullish, I mean.
Hmm.
So if you're positioning to, this is Feb 27th. This is sort of what I was talking about to lead the show, is you're getting cheap vol in both directions. Let's look
Hmm.
at March. Okay. So this is March at the money, 88 calls on a 1-year chart. Like, come on, right? That's too cheap. So it's 650 and you have till March. Let's go farther. Let's see. The farther I go out, I might turn this into a spread, but
Hmm.
let's go out to May.
Okay.
Sorry, that one's $9. Let's see what a call spread would look like. Where are we capping our gains here? Right at 10. Let's cap our gains at like 105 on a call spread out to May. All right, so this is a 90, 105. Cost you about $5 out till May. Now, again, it's probably underpriced if you're correct. If this thing bounces, you're going to get that move in no time. 85, I'll just mess around and go 110. Am I getting any money for this? Yeah, the 110 call, I'm selling it almost $2.50. So here's an 85 one. This gives you a break even at 93. And it was there 2 days ago. It was above that level. So this is an 85 110 call spread. It costs you $8. This is essentially, I would look at this. You'll hear this term like stock replacement.
Yeah.
This is essentially a stock replacement options trade where you're buying a slightly in the money call, the 85 call, and you're selling like a call where you're kind of your price target. Like you'd be happy if this thing went back to 110 over the next couple of months. This is a trade that's almost like, all right, well, what am I giving up to do that? Right now, you're giving up about $5, but you can go a little lower. So in this case, you're giving up $2, $3 with your break even. So that I think people also call it like a poor man's covered call,
Yeah.
where you're buying like slightly in the money options, and then you're looking to see like where you would like what your price target essentially is and where you would sell, and are you getting enough money to sell that option. So in this case, this is an 85 115. Your break even's 93.80, and you're selling the 115 call at 170. That one I would probably do farther out on the calendar, in like into the year. But yeah, so this is a good way to kind of like mess around. I think the farther you go out in Netflix, you're going to want that upside premium. Once you get into this nonsense, you want to be selling calls up here. But man, if you're just doing something for this earnings and like maybe the next couple of months, like you're talking Feb,
Hmm.
I think just buying a call somewhere near here at some point, I'm not saying today,
Yeah.
if you saw even more weakness, Friday, they report Tuesday. If
Yes.
you saw weakness into that and Netflix was trading 85, man, I would take a shot, but I would go farther out. I wouldn't isolate the earnings. I would go farther out.
CC, I know I think you had a couple things that you wanted to touch on, but we do have a good question from MP kind of circling back to the VIX spike scenario earlier.
Mhm.
MP was asking, could you kind of design a trade or two for a scenario like that in the SPX?
Sure. So let's say the VIX was 20 right now. Let's just
Okay.
pretend, right?
Okay.
So let's say instead of like the 100-point, move we just saw, not even 180 or whatever it's been. The instead of that, we got, a 3% pullback or something, or a 2.5% pullback. And the VIX was 21. And it also depends how that pullback happens. But let's say we got that. What I would be looking to do in a moment like that is probably potentially maybe looking a week out. And there would be a couple of things that I would do. Is I would say, all right, we're at 6,900. Let's pretend the VIX is 21 right now. And I think, all right, if we bounce, what are we going to bounce? Maybe like 100 points, maybe 80 points, something like that. So in that case, I would be looking out like 1 week. Monday, there's no trading. So that's the 21st, I think, next
Yeah.
Wednesday. So the 21st, next Wednesday, takes you up to about pretty much 7,000. So that's the options are pricing. If we were to bounce right now, a week from now, we could rally up to about 7,000. So I'd be looking to do that in a couple of ways. I probably wouldn't be selling put spreads. If it was the VIX was 30, that second scenario we talked about, I would be selling put spreads. I would want to define my risk because I want to take advantage of that 30 VIX. With the VIX 20, 21, it's not as sexy to be selling puts because you could be wrong for another couple percent and you kind of put yourself in a weird situation.
Yeah.
So there's two things that I would be looking, and let's just do one actually. So
Cool.
let's do one of Jan 21st, 7 days from now. So let's do that upside butterfly that we talked about last week.
Okay.
Really isolating 7,000. Sorry, got a frog in my throat.
You good?
So let's isolate 7,000 and let's just look at a couple of different versions of this. So 69, let's first look at like the 6950, 750. All right. So you see this trade on the chart and here it looks 5 days, right? So your break even in this is 69.58. And this is buying the 6. You can do this as a call spread. We have it as an iron condor right here that we're looking at.
Okay.
But let's say you're buying the 6950 call. You're selling 2 of the 7,000 calls, and then you're buying 1 of the 7,050 calls. So this is basically playing for a bounce in SPX back up to the upper reach of the expected move. And you can actually see that right here. So see this expected move line?
Yeah.
See how it gets you like right into the middle of this trade or almost?
Yeah. Almost, yeah.
That's your max profit on this trade, right?
Yep.
And in this case, you're risking 875, let's just call it 9 to make 41, right? So if you get your bounce in the VIX or in this SPX because you sort of, the VIX was 21, you think we bounce from here, you get that bounce, this thing immediately, as it returns up to this level, you're pretty much immediately going to be into a double at that point. Let's just put this trade on actually. So let's do 41. Is that right? Yeah. All right. So we're going to do this so we can track it. I'm just putting it in as a paper trade.
Okay.
So on that, you're looking for that bounce and you're looking for it to travel up above your break even, which is 69.59, which by the way, I mean, it could do that tomorrow. And then as it travels up to 7,000, you're going to see those profits and those roll in. And then once you're up near 7,000, or you don't even need to get that move. Even if you got to 69.75, you might like the profits. That's a way to position at high vol for a bounce without spending too much money. The other version of that would be the same thing. Let's do a scenario where the VIX spiked to 30, right?
Okay.
I would be looking out to like this Friday, right? And I would be looking at so that's the 16th. I would be looking at some call spreads, very similar to what we were just talking about in, what was the name we were talking about where we did the narrow call spread right above for earnings?
Was that not Netflix? The one before it was it Taiwan Semi?
No, it was the other one. I've already forgotten.
Oh my gosh, we don't need.
Yeah, there's a lot of stuff going on in the market. It was it was the full stack name. All right.
Nebius.
Yes, exactly. This is very similar to that. So this is like just sort of buying a slightly out of the money. I don't love this one, but let's go a little higher. All right. Yeah, that one. Okay. So now we're starting to see. All right. So in a scenario like this where the VIX is 30, right? And I'm just playing for a short duration, like we're gonna bounce here soon. And when we bounce, so the higher the VIX is at the moment, the bigger that bounce is gonna be once it happens. And once that capitulation, like it's those mornings that you just see everybody kind of puking out everything that morning, and you get those massive reversals. You can look to the upside in SPX, especially if you're doing short duration, just for like these out of the money tight call spreads. In this case, we're looking at a 69.45, 69.55. So you're basically just, you're playing for a bounce that the SPX bounces, and by Friday at the close, back above 69.50 or 69.60, let's say. And if you get that bounce, you're risking 3 to make 7, right? And you could kind of like sprinkle a couple of expiries out a couple of days where
Okay.
you're basically saying, all right, I've got, I'm targeting a bounce of 50 points in the SPX. This one targets a bounce of 80 to 100 points, and I'm getting 10 to 1 odds on that. Those kinds of things I would position for. But if it was a 30 VIX, I'd also be looking to sell some put spreads, to be honest. So let's say we were down 5%. I'd be looking to maybe, let's go out to like Monday or Tuesday because you catch the weekend. That's call spread. I don't want that. Put spread. Let's go the 20th. So this is a Tuesday. So let's say the VIX was 30 and the market had just puked 250 points, right? And you had a terrible open and you're down, almost 2% prior to the open. In those cases, I would be looking to sell volatility as well, and perhaps do those cheeky upside trades we were talking about. And I would be looking at something like, let's say 60, I don't know. This is not a real trade because this is a hypothetical scenario, but I'd be looking for some out of the money put spreads where I'm selling, let's say, a 6875, 6850. So this is like a $25 wide put spread. But if the VIX was 30, this thing would basically be trading almost 50-50 risk reward, because as vol expands, all of these spreads away from the money go towards 50 deltas because anything can happen. So in that scenario, I might be able to sell this at 12, like risking 13, or I might be able to sell it at 11, risking 14, right? And then as soon as you get that bounce, that $11 goes to zero and you collect the whole thing. So that's it. At a 30 VIX, I'd be doing a lot of this kind of stuff over the next, I'd give myself a couple of days for it to happen.
Gotcha.
Yeah. And then can we just talk right before we hop off? Actually, no. We'll get into it. We should do a 0 DTE day at some point and sort of like kind of trading those intraday moves. Like, so for instance, right now, the two, I said, let's not do it. And now I'm doing it. So
Let's do it.
The things that I watch for on intraday moves is, so let's say we just did this bounce was real. The big thing into the close, the big thing was this just cleared. There's two intraday moving averages that I keep my eye on. The one is like the 1 minute interval, like SMA. And so that right now is 6,897.50, right? So we're back above that. So if this fails right now, we're probably finishing somewhere between where we are right now and the lows, and probably somewhere near that, unless, like the just sentiment just turns like into a puke into the close. To the upside is the more interesting thing. So
can't tell, CC, I can't tell if your screen share is.
Oh, sorry.
Are you pointing? Are you pointing on your screen? Okay, there we go.
I was looking at the wrong thing.
All good.
So, all right.
Sweet.
So that, like that 1 minute interval is like right around here, right? So we just cleared it here. You can almost see the candle when we got through it right
Mhm.
here.
Yeah.
The expected move into the close is basically back pretty much to that, or up to about 69.16. I would say if this picked up at all, picked up some steam, the other one I keep my eye on is the 5-minute interval, 200. And it's sort of a, when those two, today's not the best example because they're so far apart. They're almost 50. That one's right now is at 69.47. So they're almost 50 points apart from each other, which basically is like a coin toss. Where we go from here into the close. I would argue that there's a lot of room to the upside for this to travel because that 5-minute interval is so much higher than where the market is right now. But I would say that when those two things converge, and they did yesterday, and that close we had into, what did we close at? We ripped into the close up to about 69.62, I think was the close yesterday in the cash. And that was a pretty big rally. We rallied, it was like 69.40 until the last half an hour. And we ripped into the close. The 5-minute and 1-minute interval SMAs were on top of each other, and the market went right to them and pinned into the close, right? So, for instance, yesterday, when we were at the lows in that last half an hour, I positioned via 0 DTE SPX options for, I had a short 65 centered butterfly, and I had a short centered 60 butterfly, and it almost finished basically perfectly. And those were trades that, like, into the close, I was doing for like literally I sold the 65 centered one. I sold, it was $5 wide. I sold it at 4.90. I was risking 10 cents to make 4.90,
Wow.
$4.90, and it hit, right?
Right.
So I would say on 0 DTE stuff, like, everybody's got like their own technicals and everything like that. But if you are trading SPX 0 DTE options, keep an eye on, like, whether, like, if you see those things converging,
Yeah.
oftentimes the market returns near or at those levels into the close. And you should be very aware of them, because if you own calls above that, you probably should get out for like a loss. Like, let's say if you're buying, stuff on this sell-off, and then all of a sudden those moving averages are below your call strikes, like, kind of take the profits and sort
Yeah.
of position for those moving averages. So anyway,
I
we can
think
get into more of that like
yeah.
later.
I think that, I mean, that was a little preview, but yeah, I think the chat would love more of these ideas
Yeah.
for sure. All
So
right.
basically, according to that, there is a high probability that if we don't rally soon, that let me just look real quick. 1 minute. 6897 is that 1 minute that I was talking about.
Yeah.
We could pin right here at like 6900 to 6895. So
Okay.
just keep that in mind into the
Sure.
close. Because if you strayed really far from that and then it failed, like if we ran up to 69.15 and it failed, you could position very cheaply for us to go right back to 6900 into the close. So
Sure.
anyway, that's my
Yeah.
0 DTE gambling lesson for the day. So,
Love it. And ending on a lesson, I'm always gonna be for it. So I like that, CC.
somebody said do it.
Yeah, yeah. CC's we do record. This is JJ, this is on YouTube, so you can just watch the show. If you miss the show, you can just watch on YouTube. But we do record a lot of the stuff in the STN room. So if you ever need a recording, just give me a shout. All right, CC, let's wrap it here for today. Always appreciate Options Unchained every Wednesday, 1:30. It's scheduled till 2 p.m., but we went extra because there was great conversation, great questions from the chat. Always appreciate it. CC, you will be in the STN room on Friday at 10 a.m. Is that correct?
Excellent. All right.
Awesome.
We will
Awesome,
see you.
CC. All right, thank you.
Awesome. See ya.
All right.